All right, so we're going to look at a ICT New York Open day trade. This is a scalp, and this is a typical exercise that we use for 1 minute charts, but it also actually can be a trading model. The chart I have here is a 1 minute chart. It's denoting the New York Open kill zone, and this is 7 o'clock in the morning New York time, and I'm highlighting the bullish order block and the buy side liquidity pool above the marketplace that I'm interested in taking profits should I get an entry at the blue shaded area. So I'm watching price in here, and there's 2 points of reference I'm looking at, and in a moment you'll see equal highs form, and I'll annotate that in the chart so you can see what I'm referring to. I'm waiting for a bearish order block to send price down into that blue shaded bullish order block. Now the idea is I'm going to be buying at that blue area and then selling at the orange area. So I'm forecasting it in advance. I've annotated the chart at the time of this recording this morning, and I recorded and sped it up into 40 seconds and then sent it on my Twitter feed so that way you can see all this was already there. This is a little bit slower. It's a little bit over an hour or so of actual time recorded. Okay, you can see the equal highs that are forming now. I'm going to annotate the chart so you can see there's those 2 equal highs. That's I'm waiting for it to run above that and trade into the bearish order block that's annotated here with the yellow box. Now at the time of the recording, I didn't have that yellow box or that shaded area in there because I'm trading the market. I'm putting that here so you can see and follow along with the narrative I had in mind at the time. So it's going to pump up into that yellow shaded area. Now if this was a larger time frame, I would sell at that yellow area and then cover the short at the blue area, but the pips are just too small. The larger move I'm anticipating is that blue area up to the orange area. Okay, so now I'm just waiting for price to drop lower. We hit a bearish order block, so now we're going to look for the relative equal lows to be violated, and we get that on this candle here. All right, now we're going to watch it drop in. I'm getting my order ready. So now all I'm doing is watching price. I want to see price drop down into that blue shaded area. And when it does, I'm going to click the buy. So that way my order goes in immediately at the market. My stop goes in, and then my limit also goes in at the same time. So now I'm long. And now I'm monitoring price. I don't want to see price go below 24.32. And these are minute candles, and you'll see how much time transpires. Now that's it. That's a run. The market should expand on the upside. This is what I'm thinking at the time. And that's right there, a positive. I'm going to see that right there. And what I'm saying is should price trade above that short-term high, that's the only time I'll move my stop. And there should be some expansion here on the upside. I'm showing the time of the recording, real time. So we've run above that short-term high, and blew above that buy-side liquidity pool. And I'm going to be anticipating another run into that orange shaded area. I'm going to scale off half at I'm on 24.64, and then I took off another remaining portion, and I left 2 on, and you'll see me move the trailing stop loss up, which eventually gets tagged out, but 80% of the trade was taken out at the highs. And there you go.